Hilltop Wealth Advisors Economic and Market Update for the fourth quarter of 2025. I'm David, here with Brittany, and we're here to talk you through what's been going on in the markets and what we're watching as we head into the rest of the year.
And there is a lot to be watching. As of early November, we are in the midst of a government shutdown. The Fed has cut interest rates twice so far this year. Tariff negotiations have continued, and AI has been a very hot topic.
Yes, it has.
But let's get into some of the details. David, how has the market been doing?
Well, it has continued to be another strong year in the stock market. The market keeps hitting all-time highs, and as of early November, the S&P 500 is up over 15% year to date and up over 35% from the lowest part of the market decline back in April. A lot of that positive performance is being driven by solid corporate earnings, a resilient consumer activity, and the excitement over AI. And that's not just in the U.S. stock market that's doing well. International equities have quietly staged an impressive rebound, up over 20%, helped by a weaker U.S. dollar, which boosts the value of foreign earnings when converted back to those dollars. Developed markets like Europe and Japan have benefited from the cooling of inflation, improved business sentiment, while emerging markets have gained momentum as global rate pressures have eased and trade activity has picked up across Asia.
Definitely. It has been nice to see the positive market returns across the board. But like you alluded to, we can't talk about 2025 without mentioning artificial intelligence.
Right.
AI continues to be one of the key themes driving markets this year.
Yeah, that's right. AI has shifted from hype to real-world implementation, where we're seeing companies across almost every sector, from manufacturing and logistics to healthcare and finance, leveraging AI to improve efficiencies, cut costs, and drive innovation.
Absolutely. And the technology giants that led the AI rally in 2023 and 2024 are now focusing on profitability and scaling their models, while newer players are emerging in areas like chip design, cybersecurity, and software integration.
Yeah, and that's all exciting, but it also reinforces the importance of diversification. Not every company labeled AI will be a long-term winner, so we need to spread out that risk, and that'll remain key.
Yes, exactly. One of our other big focus areas continues to be interest rates. The Fed cut rates in September and again in October, so the current federal funds target range is now 3.75 to 4%. And these rate cuts are the Fed's response to softer job market signals and a desire to support labor market resilience.
Yeah, looking ahead, inflation remains a key driver in what happens next. After easing from its 22 highs, inflation has inched back up, with the latest 12-month CPI around 3%. If inflation runs hotter, especially as the impact of new tariffs filter into prices, the Fed may hold off on rate cuts longer than the markets expect. And for now, the Fed has hinted at one more rate cut before the end of the year, but policymakers want to make it clear they have the evidence that inflation is cooling before making any further move.
Which really brings us to an important point. Updated economic data in the U.S. is fairly limited right now because the federal government entered a shutdown at midnight on October 1st after funding legislation failed to pass. And it is now early November, and there is no immediate resolution to the shutdown in sight, which is creating uncertainty in the economy.
Yes.
We're not getting all of the full economic data, and there are furloughed workers, halted contracts, and delayed services, all playing into the broader risk picture right now, too.
And from a market perspective, the good news is the direct impact of the shutdown has been fairly contained so far. But longer term, if this thing drags out, it could dampen growth, shake confidence, and start to affect sectors exposed to that government spending or consumer stress. So as we move into the closing quarter of 2025, we're watching the duration and the resolution of the shutdown and how that might ripple through the economic data and whether that influences the investor sentiment.
Definitely. Looking beyond the U.S., the global picture is mixed. Europe continues to see slow growth, while several emerging markets, especially parts of Asia, are showing stronger momentum.
And that means the international diversification still makes a lot of sense. For portfolios that have been heavily U.S.-centric, there's value in exploring regions with lower valuations, stronger growth prospects that aren't fully priced into the market.
So as we close out 2025 and move into 2026, here are some of the things we'll be watching most closely. One is the path of interest rates. Will cuts continue and how fast? Another is economic growth signals, especially consumer spending and payrolls. We'll also be watching policy and fiscal risks, including the duration and impact of the government shutdown, but also any updates related to tariffs and global trade. And then lastly, we will be watching AI because many companies have been investing heavily in AI, and we're all only beginning to grasp what this technology could mean for businesses and the economy long term.
Yep.
And there has been talk of whether we're in an AI bubble right now, but it is very possible that we are still in the early stages of this technological innovation.
And we know the short-term noise from the news can be loud, but our core advice stays the same. Stay diversified, keep a long-term focus, and let your plan guide those decisions rather than the headlines.
Exactly. We will keep monitoring any developments, and we will make adjustments where it makes sense for your portfolio. If you have questions about how this backdrop affects your financial plan or investment allocations, please reach out to us at hilltopwealthadvisors.com or scan this QR code. And please share this video with your friends, family, or coworkers if you think they would find this helpful as well.
Thank you for your time, Brittany, and thank you all for watching, and thanks for trusting us to help you navigate your financial journey. Take care, and we'll see you next quarter.
Thank you.